What's up, guys? Bulls and the Bears here with the weekly recap video going over the first week of May. So far, slow and steady. Slow and steady. Really not a ton to talk about in this video. And as a result, I would like to spend some time going over how I might look for a new opportunity with the wheel strategy, a type of screener that I can use. I give you guys a free option for you to check out as a stock screener for whatever strategy you want to do. So I'll show you that after I talk about the update. So here's the update. The account, 49,800. Intraday today, we hit the coveted $50,000 mark. It happened. It also happened just before the bell, just before the end of the day at 3:50. We hit over 50,000 too, but then it came down right at the end. I was really hoping we could close the week for this video at or above 50,000. That would have been really cool to ride into the weekend with, but we'll have to settle for just shy of 50. But it is a remarkable number to look at when I hover over it. Crazy. We started with 20,000 in January of 2024, and we are just about at 50K in May of 2025. 1 year and 5 months. Very, very nice. Got to keep this going. Road or the journey to $100,000. We're getting close. Now, what happened this week? Not a ton. Why? Because I don't have a lot going on. I have Target and I have TSLL. That's it. That is it. The other big position I had was Microsoft, but that was last week. It had earnings. I closed it. Great profit, monumental profit. And I actually wanted to show you guys further detail of that trade, because I realized I never showed you guys the full details. So here are the full details with my Microsoft position. I showed you guys what the profit was on the day of the closing, but that does not incorporate everything that happened before that, all the covered calls. So I went over this profit right here, the profit of my original cost basis and the price that I sold it at. I ended up profiting $4,076 last week, but I've had this position since February. I bought it on February 3rd, added to it February 26th, added again to it on March 31st. That's a weighted average trade date of March 3rd. That's kind of what I have here, which is important for me to track, like, my annualized return on investment, like how much time has this full investment been invested, and the weighted average was as of March 3rd basically. But here are all the covered call premiums that I've locked up to this point when I closed it. $750 in covered call premiums on top of the $4,000 that was realized last week, for a grand total of $4,800 made with Microsoft. The Microsoft campaign that started back in early February, ended early May, like the first day of May. $4,800. It's a return of 44% on my investment of almost $11,000, or an annualized return of about 269%. So these are the full details with Microsoft. Wanted to show you guys that. With that off the books, we are only left with Target and TSLL, which, back to the Excel file, is only a fraction of my account here. So, yeah, I have 9% of the account is in Target, 10% is in TSLL, and then 81% is cash. So this is kind of my pie chart, my portfolio allocation as of right now. And here are the cost. Target cost me $4,600. TSLL, I have $5,000 invested in it. The 50% here just means that this is a half of a position. I'm willing to double down once more to have a full position. But that's the cost for both of my positions. Grand total of $9,600 invested with $41,000 in cash. So a ton of dry powder that I'm waiting to put to work. And right now, I'm not seeing anything at the moment that I'm ready to buy, because things are coming up off the lows. I like to buy more so at support. But if stocks are going up, then they're not really at support, are they? They're more so bouncing away from support. So I'm being a little patient. Plus, I have reservations about this bounce anyway. I'm not convinced that it's going to continue. I want to be patient to see what it does. If it does roll over, my patience will be rewarded and I can buy things at lower prices. If the market does keep going up, then I'll be happy because my existing positions should benefit. So it's kind of a win-win right now. There's no sense of rushing into things. The market will always be there tomorrow, the next week, the next month, and for the next year, for the next 40 years. I don't need to rush into things over the next few weeks when this is a marathon, a multi-decade marathon. You know, it pays to be patient. Your money is safe in cash. So if you feel a little hesitant like me, just be patient, relax, focus on other things, and then see what the market does. But right now, just dealing with our two positions and, of course, my SPY hedge, or my portfolio hedge, where I have a SPY put debit spread, which is down $42 because the market has come up since I bought this thing. But I have until June 6th. It was a 30-day position, 30-day trade that we'll see how it goes. It cost me $250. If the market does not come down, it'll cost me $250. That's fine, because it probably means the market's going up, which is going to be great for these two positions, where I will make way more than $250 that I might lose on the SPY puts. Okay, enough of that. Let me bring up the Robinhood app just to show you the exact profits on the week. Here we are, Robinhood app, $232 on the week. That's it, $232. And half of that, more than half of that, was from a Tesla day trade that I did today. I couldn't help myself, okay? I'm not going to be doing this. I'm not falling into this trap where I'm going to be scalping 20 trades a day or anything like that. I just could not help myself when Tesla was up like 5-7% straight up. I had to fade it. And I'll show you guys when I did that. That was a quick $120. But aside from that, TSLL, I had some covered calls that I locked up this week. I had ones that I sold. Let's see. Oh, right. I sold 4 covered calls because I have 400 shares. But when I bought back these covered calls, I accidentally did 2 contracts. So I bought 2 of them in this order for a $34 profit. And then I bought the remaining 2 with this order for basically a $34 profit, for a grand total of $68 profit there on TSLL covered calls, because I sold the 13s and it didn't get up to 13. Target, same thing. I sold covered calls for this week, collected 23 cents for it, and then bought them back for 1. But I got a partial fill today. So I bought it. I bought 1 back for $22 profit, and then I had to buy the other one back separately because I had to cancel the order first. Then I bought it back in a separate order. So 2 different orders to buy back the covered calls for $44 profit there. And that was it, $232. And that's really all there is to it. I mean, that's all there really is ever going to be if I just have these positions, is the covered calls against them. That's it. And then the Tesla day trade, of course. I'm looking to sell puts on other things if they give me the opportunity to, but so far, not really happening. Let's go into Trading View and talk about what's going on. The S&P on the weekly chart, slightly down $2.40, down 0.4%. Nothing crazy, kind of like a doji candle there, but we'll see. Definitely interesting that it stopped around here. If you zoom in down here, you can see as soon as it touched this red zone that I drew out, it rejected and it failed to get back up there. What is the red zone? Well, that's when you're within 20 yards of an NFL end zone. No, I'm just kidding. It's the zone that I drew here, which kind of captures this bottom over here, some support that we've seen. It loosely covers it. You could extend the range a little bit to maybe bring this zone down here a bit. So you cover these support levels, which you can actually then extend further to the left to capture this resistance level here. This is probably a better zone. And if you see what SPY did this week, it rejected when it got into the zone. So that's definitely a key area to watch out for. It was also resistance right here. That's the previous high in this decline. So we sold off, bounced up, made a high, a lower high, sold off even more, lower low. Now we're popping up. Will we make a higher high and break the downtrend, or will we pause and stall out here and put in a lower high to continue the downtrend? That's the key to watch out for. This level between 565 and 580 is very important. I expect some turbulence to happen in that area, unless, of course, we get some positive news, which could happen this weekend because Trump is supposed to meet with China. The U.S. and China are supposed to have trade negotiations this weekend, and that's the big one. All the other countries, very minor. Not only are the tariffs not as much, but the imports aren't as much. China, the tariffs are huge, and the imports are huge. The implications for a lot of companies are very big for these Chinese tariffs. So the negotiations that they come up with is going to be big. Right now, the tariffs are like 140%. Trump, I saw in the news today, said 80% would be pretty fair, although the market still considers that pretty high. So it sounds like Trump wants to negotiate to around 80%, but I don't know if the market would like that. I think they want to see, like, I don't know, 10% like everything else, or maybe just under 50% might be fine. I don't know. But it's going to be a key economic data point there, a big headline for sure. So the futures on Sunday night, I expect are going to be pretty volatile. We're going to have a pretty big open, a pretty big gap on Monday, up or down. That's my expectation, and that's why I feel comfortable not having a ton of exposure on right now. I'll tell you that much. So that's what's going on in the market. Let's take a look at our positions here. Target still struggling up here. My goodness. This is definitely a zone to watch out for. I'm going to add a little rectangle box here. Maybe bring it down to there. You can see this has been an issue for Target. It cannot seem to get above this $98 level. And it hasn't happened again. Yesterday it got up there and then rejected. We're at 96.50. It's not a terrible level, but I need it like at 100 or more right now. I looked at the simulate my returns on Robinhood to see what price of target I need for my leaps to be profitable. It's looking at like 101 right now. That could change with implied volatility if that changes, but as of right now, I need it to be pretty much over 100 to be profitable. But I'm able to sell covered calls well above that, so that means I can still bring in premium and make this position work for me, even though it's in the red. That's the beauty of selling options. So I was able to sell covered calls at 104 for next week. So that's locked in. Target will be paying me for one more week, guaranteed. It's paying its rent, so I can't complain. TSLL benefited nicely from a nice Tesla surge, and I'll actually go to Tesla first. Go to the 1 minute chart where I can show you where I kind of took my little day trade. So I looked at TSLL, all of a sudden it was up 5%, then 10%. I was like, what the heck's going on? What's Tesla doing? Massive rip. And I actually didn't really see it until right about here. And at that point we were up, let's see, something like 7%. Yeah, 7.5% or so. Pretty much straight up, not really any pullbacks. I mean, this was sideways, but it wasn't a pullback. Overbought on the RSI, and not a ton of, like, no real headline that would suggest this thing's going to start to rip all day. So I decided to fade it. Just look for a pullback that hadn't really happened yet in a full 7% straight up move. Thought that would be a pretty safe bet. I bought a put here, added another one up here. It pulled back, made $120, and that was that. Walked away. I didn't look to play it when it got oversold here. I wasn't even looking at it. All I saw was this massive extended move for essentially no reason, and I couldn't help myself but to just make a quick trade on it. But I did not keep Tesla open all day or anything like I had been in the past to trade it the rest of the day. I didn't do any of that. So just the one trade because it was asking for it. It was literally asking for it. Tesla got up to 307, which is the highest it had been since what, early March, so a couple months, and that's nice. That was positive, but it ended up closing under 300 anyway. TSLL got as high as almost $12, which is really nice. I have 400 shares at $12.50, so we're getting so close to being at break even, to being profitable, but it just needs a little bit more. How much more can I ask for? I don't know, but I really hope we get more. I have covered calls right now sold at 13 for next week, which gives me 50 cents of upside on my shares. That would be a $200 profit if I got assigned at 13. I'm happy with that. This isn't really a product I want to stay in anyway, so the sooner I can get out, the better. And a $200 profit on the shares, I'm happy with to walk away with. But yeah, doing a good job collecting premium. So my 400 shares at $12.50, that's my original basis. But when you factor in all the covered call premiums, my adjusted basis, my adjusted break even is actually $11.29, because I've recouped $1.21. $1.21 in premium I've recouped, $1.21 in cost. And we're actually at $11.34, which is 5 cents higher than my break even. So that means I could close TSLL right now, in theory, and have a net profitable campaign. When you factor in the loss on the shares and the premiums collected through covered calls, it would net to a positive, profitable number. That's what that means, to be above my adjusted break even. So that's nice. That's very positive. But I'm not trying to settle for that. I'm trying to make money on the shares too. So we're going to wait it out a little bit longer. And that's that. That is everything. So lastly, we're going to talk about scanning for another trade, a new position, a new wheel campaign. And one source that I use is Finviz. I've used Webull Scanner before. I've even tried to use a scanner that's in TradingView that we were just on. But Finviz is another cool site that I like to use. I use it at work all the time. It's a nice map. It's a nice hub, I guess, to just see what's going on in the market. First of all, you can go to the map here to see the heat map, to see what stocks are doing what. This is all the S&P 500. The size of every square is based on the weight of the stock within the S&P 500. The brighter green it is, the higher up it is. The brighter red it is, the more down it is. So you can kind of get a good snapshot of what the market's doing there. But there's also a screener option, and this is what I'm going to show you guys today. So under Finviz, on the Finviz website, go to screeners, and you have all kinds of criteria that you can edit. I'm not terribly picky, so I'm just going to edit a few things, filter a few things. Index doesn't matter, price doesn't really matter so much, market cap doesn't really matter, but I will edit volume. I want to make sure there's enough volume on the stock, because with a stock with very little volume probably has, very little options activity, if any at all. So, if it doesn't have enough volume, it's probably not worth trading. So I look over 1 million shares a day is what I look for volume. So that's that. Under fundamentals, I want to make sure my company is profitable. Ideally, I want it to be profitable. So one way to do that is to go to the PE ratio and set that to profitable or above 0. A price to earnings ratio above 0 means it's making money. And I want to make that for the forward PE too. The forward price to earnings ratio, make that above 0, which means it's profitable and going to be, or projected to be, profitable over the next year. Aside from that, the last thing I want to do is go to the technical filters and go to the RSI and put that as oversold. I'd like to buy something that's kind of maybe down a little bit and due for a bounce. And usually the RSI of 30 or less is oversold and therefore ripe for a bounce, which means it's probably selling off, which gives it an opportunity to be heading towards support, which would be a nice spot for me to buy. And here we go. It looks like only 11 companies came up. Most of them are healthcare. Most of these I haven't even heard of. There we go. Zoom in a little bit. Dickinson I have heard of. You can see, you hover over the ticker, it gives you a nice little snapshot of the recent chart. Okay, that's down a bit. These companies I don't really know very much. United Health is a huge one. That's definitely one that is a big S&P company, and one that I would definitely be willing to play with. I know they're, I've tracked them enough to know that they have good revenue, very profitable, decent growth rates, and they've gotten crushed, which is something we need to look into. So if I click on UNH, you can see this massive decline. I might as well go back to TradingView for that. Oh, sorry. I don't think you guys even saw that. Here's the weekly chart, just to show that it's at a nice little area of support that was held in 2021. It's oversold in the daily chart. A ripe opportunity to bounce and make a good move to the upside. But at the same time, it is dealing with its own problems. It issued weak guidance, high medical costs. Healthcare hasn't really been doing well the past month or two. So there's a risk there. But this is something that I would be interested in, possibly, unless the headlines are too negative. And that's basically what I would do. Now, I already looked into this. The options chain is just so expensive. To buy leaps, I have to spend like at least $5,000 if I want to get enough time on the leaps. So I'm not going to do it for that reason, just too much money. But this is exactly what I would look for. I would look for those stocks that are oversold, but yet profitable. Hopefully they're oversold at a nice support level, and I can maybe take advantage of a bounce. I'm a trader. It's those bounces that I'm looking for. I'm not looking for long-term investments. I'm just looking to make a quick buck on a quick move. Now, quick is relative. I'm not talking about 30 minutes. I'm talking about maybe a week, 3 weeks, 4 weeks. But that's kind of my goal. And this would be a good opportunity, but just too expensive for me. And TradingView isn't really, or Finviz isn't really showing me much else in that department. I already lost the scanner, I guess. But I just wanted to show you guys how I might screen for opportunities. Mostly, I'm just scanning the markets manually, typing in tickers of companies that I know, companies that I might see in the headlines. I might just go on the CNBC website to see what the biggest movers are, see if there's any big names there that I could take advantage of with the volatility if they're dropping a lot or something. So most of my due diligence or searching of opportunities is just manually looking at companies that I'm thinking of or I see in the news. But if you're looking for a scanner of some kind, Finviz is pretty good, I got to admit. So that's going to do it for the video, guys. Thank you for watching. If you enjoyed, hit the like button, subscribe for more content, and I will see you all next time.